Have you ever wondered if you could live for free? I mean, truly free, with no monthly housing payment eating up your paycheck. It sounds like a real estate fantasy, right? Well, for U.S. veterans and active duty service members, this fantasy can become a rock-solid reality. The key is a powerful tool you earned through your service, the VA loan. This isn't just about buying a simple house in the suburbs. We are talking about something much bigger. We are talking about using your VA loan to buy or build a multi-unit property, a duplex, a triplex, even a fourplex, and letting your tenants pay your mortgage. It is the ultimate house hack, and it is entirely within your reach. This essay will be your field guide. We will break down exactly how you can use your VA loan to secure a small apartment building of your very own. Forget the complicated jargon and confusing financial mumbo-jumbo. We will use simple words and clear, actionable steps. Every time we mention this amazing loan program, we will call it the VA loan. We will walk through the rules, the benefits, the process from start to finish. Leverage your military service into a powerful wealth-building machine, creating a legacy of financial freedom for you and your family. So, get ready to change the way you think about homeownership forever. The VA loan program was designed to give veterans a leg up in the housing market. Many veterans use it to buy a single-family home. But the program allows for so much more. It contains the blueprint for becoming a real estate investor, the ability to acquire an income-producing asset with potentially zero money down. This guide will show you how to unlock that hidden potential. Stop just paying for a place to live. Start owning a property that pays you back. Let's get to it. Think about it for a moment. Instead of one home, own a building with 4 separate homes inside it. Live in one, while 3 families pay you rent every month. That rental income flows to your lender to cover the mortgage. If you structure the deal right, the rent could cover the entire payment, including taxes and insurance. This isn't a get-rich-quick scheme. It's a get-wealthy smart strategy. It requires a plan, some action, and the right knowledge, which is exactly what you are about to get. So, get ready to change the way you think about homeownership forever. The VA loan was designed to give veterans a leg up. Many use it for single-family homes, but it allows for much more. It contains the blueprint for becoming an investor with the advantage of acquiring income-producing property with little or no money down. This guide will show you how to unlock that potential. Time to stop paying and start owning. Let's get to it. So, who gets to use this amazing VA loan benefit for a multi-unit property? The answer is likely you. If you are a veteran, an active duty service member, or an eligible surviving spouse. The first step, confirm your VA loan entitlement. This is the core benefit you earned. Get your Certificate of Eligibility, your COE, from the Department of Veterans Affairs website, or obtain the COE through a qualified lender. The COE proves you have VA backing for your loan. It's your golden ticket. Secure it first. Next step, involve the lender. VA guarantees the loan, but private lenders provide the money. You still must meet lender requirements for credit and income. They will check your credit score and your financial history. Don't let that scare you. VA guidelines are often more flexible than conventional loans, but you must show financial responsibility. A VA-savvy lender will guide you smoothly. Now, the property. 1 distinct unit. 2 distinct units, 3 distinct units, 4 distinct units. Anything larger. Different financing. Commercial. We're focused on the duplex, the triplex, and the mighty fourplex. The property must meet VA minimum property requirements, MPRs. It must be safe, structurally sound, and sanitary. Think of it as a basic safety inspection. No crumbling money pits. Finally, buying an existing building or constructing a new one must comply with local zoning and building codes. This is non-negotiable. You cannot build a fourplex where only single family is allowed. A good real estate agent and a qualified builder are your best allies. They know local regs and can find a suitable property or a piece of land where a multi-unit is legally possible. Get these foundations right, and you'll avoid massive headaches and set up a successful investment journey. All right, let's talk about the single most important rule in this entire strategy: owner-occupancy. This is the one rule you absolutely cannot bend, so listen closely. The VA loan program is designed to help you buy a primary residence, a place for you to live. It is not for becoming an absentee landlord living across the country. When you use a VA loan to buy a multi-unit property, you must certify you intend to occupy one unit as your main home. You can't buy a fourplex and immediately rent out all 4 units while you live somewhere else. That would violate the loan terms. You must move into your unit within a reasonable time after closing, typically 60 days. After you move in, you are expected to live there for at least 1 full year. This is the 1-year rule. What happens after that first year? Your options open up. You could continue living there enjoying the cash flow. Or you could move out, rent your unit, and use your VA entitlement again to buy another property. This is how investors scale. This rule makes the whole system work. It's a small trade-off for an incredible benefit. You acquire an income-producing asset with little to no money down if you live there for a year. Think of it as being the on-site manager of your own small business. You will be right there to handle tenant issues, oversee maintenance, and ensure your investment runs smoothly. This hands-on experience is invaluable for first-time landlords. It teaches you property management and gives a deep understanding of your building. Don't try to outsmart the system. Loan fraud consequences can be severe. Embrace owner-occupancy as part of the strategy. Pick the best unit for yourself, maybe the one with the best view or the extra storage, and settle in. For 1 year, you'll have the shortest commute, a walk down the stairs or across the hall. It's a fantastic way to learn landlording while tenants pay down your mortgage and build your net worth. You can't build 4 units and vanish like a real estate ninja. You've got to live in one. This is where the magic really starts to happen. One of the biggest hurdles for any home buyer is proving they have enough income to qualify for the mortgage. But when you buy a multi-unit property with a VA loan, you have a secret weapon: the rental income from the other units. Lenders can actually use the potential rent from the units you are not living in to help you qualify for the loan. This is a massive advantage that can dramatically increase your purchasing power. It can be the difference between qualifying for a small single-family house and qualifying for a cash-flowing fourplex. Here is how it works in simple terms. During the appraisal process, the appraiser will determine the property's market value and prepare a rental schedule. The appraiser researches the local market and provides a professional opinion on what each rental unit could realistically rent for per month. This isn't just a guess. It is an estimate based on what similar units in the area are currently renting for. This document, officially known as the comparable rent schedule, provides the lender with a credible, third-party projection of the property's income potential before you even have tenants. Lenders have their own specific rules, but many will allow you to use up to 75% of the projected gross rental income from the other units. Why 75% and not 100%? The 25% reduction is a conservative safety measure. It accounts for potential vacancies, times when a unit is empty between tenants, and the ongoing costs of maintenance and repairs. So, if the appraiser determines the other 3 units in your fourplex can generate a total of $4,500 per month in rent, the lender might allow you to add $3,375 to your monthly qualifying income. This extra income can be a total game changer. Let's look at a simple example. Imagine your mortgage payment on a fourplex is $4,000 per month. But the 3 rental units bring in $4,500 in gross rent. After the lender's 25% reduction, you are still getting credit for $3,375 in income. This means your actual housing cost, in the eyes of the lender, and in your real-life budget, is incredibly low. Your tenants are paying the lion's share of the debt. This powerful feature of the VA multi-unit loan is what makes living for free, or even generating positive cash flow from day one, a tangible possibility for veterans willing to take action. What if you cannot find the perfect fourplex to buy? What if you want something brand new, built exactly to your specifications? Good news, you can build it from the ground up using your VA benefit. This is the VA One-Time Close, OTC, construction loan, a powerhouse for aspiring investors. It combines financing for the land purchase, the construction of the building, the final permanent mortgage into a single loan with one closing. Far simpler and often cheaper than the old way. Traditionally, building required two separate loans and two closings. First, a short-term construction loan with higher rates and fees. Then, refinance into a permanent mortgage after construction. That meant double the paperwork, double the closing costs, and double the stress. Plus the risk you might not qualify for the second loan. The VA OTC loan removes that uncertainty. You apply and underwrite once. You close one time. Funds are paid to the builder in stages, draws, as phases finish. After final inspection, the loan converts to your permanent mortgage. Seamless transition. Some lenders may let you make no payments during construction. That gives breathing room while your rental is built. Rules still apply, up to 4 units. Must intend to occupy 1 unit as your primary residence for at least 1 year. Plans and the finished building must meet VA standards and local codes. Find a lender and builder experienced with VA construction financing. They guide you from approving blueprints to handing over the keys to your cash-flowing property. Building new gives you ultimate control over the final product. When you start talking about using a VA loan to buy a fourplex, you might hear some pushback or misinformation, even from well-meaning friends or real estate professionals. There are a lot of myths floating around about the VA program. It is time to set the record straight with some clear, simple facts. Knowing the truth will give you the confidence to move forward with your plan and educate others who might be misinformed. Let's bust some of the most common myths one by one, so you can navigate your journey with clarity. Myth number 1 is the big one. VA loans are only for single-family homes. This is completely false. The program guidelines explicitly allow for the purchase or construction of properties with up to 4 units. Duplexes, triplexes, fourplexes. The only condition is that the veteran must occupy one of the units as their primary residence. This myth probably persists because the vast majority of VA loans are used for single-family homes, but that does not mean it is the only option. The multi-unit option is right there in the rulebook, waiting for savvy veterans to use it. Myth number 2 is a close cousin of the first. You can't get a zero down payment loan on a multi-unit property. This is also generally false for eligible veterans who have their full entitlement. One major advantage of the VA loan is the ability to finance 100% of the purchase price, and this benefit extends to multi-unit properties. Some lenders may have their own additional requirements or overlays, but the VA program itself does not require a down payment for a duplex or fourplex, as long as the sales price doesn't exceed the appraised value. This is a massive advantage over conventional loans, which typically require 15 to 25% down for an owner-occupied multifamily property. The third common myth is VA loans are slow and have too much red tape. That might have been true decades ago. Today's VA loan process is streamlined and highly efficient, especially with an experienced lender. In many cases, a VA loan can close just as fast or even faster than a conventional or FHA loan. The red tape is mostly just paperwork to ensure the veteran is eligible and the property is safe. A good loan officer can navigate this process with ease. Do not let old, outdated myths scare you away from what could be the single best financial decision of your life. Stick to the facts and work with professionals who know the program inside and out. You have served your country with honor. Now, it is time to let the benefits you have earned serve you. Your VA loan is not just a thank you gift, it is a powerful financial tool, a key that can unlock the door to long-term wealth and security. We have walked through the strategy. Buy a multi-unit property. Build a multi-unit property. Live in one unit. Let rental income from the other units pay down your mortgage. This is more than just buying a house. It is about acquiring an asset, starting a business, taking decisive control of your financial future. This path is not a secret shortcut reserved for seasoned millionaires. It is written into the rules of the VA program, available to every eligible veteran and service member who has the courage to take action. Imagine it. A few years from now, you own a building free and clear. The rent you collect is pure, passive income. You have built substantial equity, not just in one home, but in 4. This is the power of house hacking a fourplex with a VA loan. You start by eliminating your own housing cost. You end by creating a stream of income that can last a lifetime. Your mission, should you choose to accept it, is to start today. The first step is simple. Check your VA eligibility. Get your certificate of eligibility. The second step is to connect with a lender who is an expert in VA multi-unit and construction loans. Ask them questions. Tell them your goal. Get pre-approved so you know exactly what you can afford. This is not a dream for someday. The market is moving. Interest rates change. The best time to start building your future was yesterday. The next best time is right now. You have the discipline, the integrity, the drive you learned in the military. Apply it here. Do not let this opportunity pass you by. You have earned this advantage. The VA loan offers a path to real estate ownership and investment unavailable to the general public. It is your unfair advantage. Use it. Build the duplex. Buy the fourplex. Live for free while your tenants build your equity. This is your chance to create a legacy of financial strength for yourself and your family. Take the knowledge from this guide and turn it into action. Your march toward financial freedom begins with that first phone call. Go make it happen.